To join you at this fifth annual Growth Summit, and I'd like to thank Mr. N.K. Singh in particular for inviting me to deliver the keynote address this morning. I think we all know that economic growth is a matter of perennial importance for governments. It creates opportunities for businesses and jobs for people. It raises incomes and living standards, and it generates resources for governments to undertake the essential infrastructure and social undertakings which can help raise citizens' quality of life. So for all these reasons, it remains today, as it has in the past, an important area of focus for government policy. But I think the key difference in the current environment, and something that Mr. Singh alluded to in his remarks, is that the modalities for sustaining growth and reaping its benefits have to contend with current changes and challenges in the global environment, which are unprecedented in recent times. And in particular, I want to highlight three trends globally that have profound implications for the growth aspirations and strategies of all nations. The first is that global value chains are being reconfigured, with countries insourcing more of their production. This is partly the result of economic development and changing cost structures. For example, China no longer competes as a low-cost manufacturing hub for the world. Instead, it is moving up the value chain and taking on higher value activities and producing more innovative products. China's share in the value added of its own manufacturing exports has gone up from less than half in 2000 to about 60% in 2011. And this is likely even higher today. China also increasingly accounts for a higher share of the world market for high technology products such as computers and telecommunications equipment. Secondly, new technologies are also enabling the more advanced economies to remain competitive by evolving their business models and processes. Digitalization is intermediating traditional middlemen and connecting producers directly with other producers and also with consumers directly. All of this has led to a fall in the global trade elasticity to GDP growth, as shown by data from the IMF. So if I can illustrate, $1 of global GDP generated more than $2.5 of global import growth between 1991 to 1995. But that has fallen to only $1.5 of global import growth 2 decades later, between 2011 to 2015. So there's a significant diminution in trade elasticity to growth. Increasingly, therefore, capabilities and innovation, rather than cost and the availability of abundant manpower resources, is going to be the basis for sustaining competitiveness of businesses and economies. The second major trend that is worth highlighting is that technological advances are affecting industries, disrupting business models, and changing the nature and availability of jobs. We know about companies like Uber, and we talk about Uberization in the world. And the WEF, in its Future of Jobs report, projected that 7.1 million jobs could be lost globally from 2015 to 2020 due to disruptive labor market changes, while about 2 million jobs could be created in fields such as IT, which benefit from these changes. So a net reduction. If I can illustrate with the Singapore manufacturing sector as an example, last year it grew by 3.6% in real terms, but employment in the sector actually fell by 3%. So there's a net increase in productivity of about 7%. If I take a longer horizon, the real value add of the sector as a whole has grown by about 1.8% per annum from 2010 to 2016. The number of jobs, however, has declined even as new knowledge-intensive jobs are being created, driven by robotics, driven by IoT, and now we're seeing the advent of 3D printing and AI. So while the jobs in manufacturing are getting more knowledge-intensive and attractive from a wages perspective, the sheer numbers is actually not necessarily growing in tandem. And so we are seeing the phenomenon of job light, or what some would call jobless growth, which has become an issue of concern even in many of the advanced economies. But I would emphasize that it's not all gloom and doom in this regard. It's really a question of new jobs being created at the expense of old. There is some debate as to whether the net creation is going to be positive or negative. I think that's something that we can pursue in further discussion. The third trend that I want to emphasize is the retreat from globalization that we see in several parts of the developed world. Slower growth and middle-class wage stagnation has sharpened the focus on the costs and dislocations that arise from globalization. This has led to a shift in the public mood, as was evident from the Brexit vote, the themes and tone of the US presidential elections, and the growing anxiety in Europe about jobs and immigration. So, while such nativist instincts will come at the expense of mutually beneficial rules-based international order, the perception is that it may yield some benefits in the short term, but the larger question and concern is that it may have long-term, irreversible adverse effects. Globalization, in my opinion, has been unfairly attributed or has unfairly borne the brunt of the blame for these ills, and we must resist isolationist instincts. The reality is that globalization can and does create significant job opportunities and opportunities for businesses. In the context of a growing Asia, for example, economic integration and connectivity help ensure that our complementary capabilities can be applied to address the growing needs of our people for the benefit of all. But it's also true that some will benefit more from globalization while others may lose out. And that is why globalization must be complemented by governments' domestic policies that enable its people and businesses to acquire new skills and capabilities so as to adapt to and benefit from the globalization trends and its impact. In other words, it's not just about building international linkages, but it's about enabling companies and people to benefit from those linkages. So the confluence of these three trends, the reconfiguring global value chains, technological disruption of industries, business models, and jobs, and the rising anti-globalization sentiments, all of these compel countries, big or small, to reassess afresh the robustness of their growth strategies against the backdrop of this new reality. So that is why in Singapore, our Prime Minister established a Committee on the Future Economy about a year ago, co-chaired by our Finance Minister and myself, at what Mr. N.K. Singh referred to. And the objective was really to analyze the implications for the Singapore economy arising from these trends and to chart a strategy for sustained growth over the next decade. And I think an important point I wanted to share with you was that this committee was 4/5 drawn from the private sector. It conducted a year-long series of consultations with about 9,000 industry heads, academia, researchers, unionists, and the purpose was really because we recognize that the current environment is a highly fluid one, and we need to draw on knowledge, perspectives, and expertise from diverse sources in thinking about the future. Last year, when Prime Minister Lee visited India, Prime Minister Narendra Modi said very kindly, whether it is manufacturing, environment, innovation, technology, or delivery of public services, Singapore does today what the rest of the world would do tomorrow. And I would say that is something that is born out of sheer necessity, because as a small, open economy where trade accounts is about 3 times the value of our GDP, we are keenly tracking developments around the world, assessing the changes, and also acknowledging that policies that have brought us this far may not necessarily be the same policies that will take us forward in the future. So they may need to be modified, and in some cases, even completely replaced with new strategies. So today I want to touch on 3 areas which this committee focused on: innovation, internationalization, and skills, which I think might also have some relevance for India and for other nations around the world. On innovation, first of all, when you see value chains shifting and tech disruption becoming the norm, economies and enterprises must find new ways of creating value in order to stay competitive and relevant. And that is why innovation is important, because it catalyzes such activities. Economies and companies that succeed, certainly in this new environment, will be those that enable innovation and the creation of value. Silicon Valley is 23% more likely than the overall US private sector to form new businesses and by extension create new jobs. according to the Kaufman Foundation. Israel's world-class high-tech sector provides 1 out of every 8 jobs, and it attracted a record $4.4 billion of venture capital in 2015. Startup India is another initiative that is noteworthy, and with its aim to nurture innovation and enterprise, and its action plan to support startup ventures and build an ecosystem for innovation. In Singapore, we are also investing significantly in the effort to nurture a vibrant innovation ecosystem. Investing in R&D and developing intellectual property is necessary, but it is not sufficient. We need modalities that allow the creation of economic value through active commercialization. And the nexus between innovation and enterprise, therefore, is key. So there are a few elements to this. First, innovation is inherently risky. Testing and validating new ideas is unpredictable, and the speed to market becomes increasingly important with more competition and shorter product cycles. So policies must support the translation of R&D and intellectual property into economic value and help enterprises mitigate the risk of innovation. In Singapore, we aim to do this in 3 ways. The first is fostering stronger public-private partnerships. Many research institutes in the public sector have developed strong capabilities over the years. The question is how we can leverage the strengths that we have built up in the public sector by fostering long-term partnerships between the public research institutes and industry. The second is to promote cross-industry collaborations, by which I mean partnerships in particular between large enterprises and SMEs and startups. Such partnerships allow companies to play to their complementary strengths. SMEs and startups tend to be more nimble and have the ability to focus, to test and embrace new ideas, while MNCs and larger corporations have the advantage of greater resources, commercialization experience, economies of scale, and the ability to integrate new solutions into value chains, which are much larger. And the final element is international exposure and collaboration. In our budget this year in Singapore, we launched the Global Innovation Alliance, which is drawing on feedback received from industry and startups on the benefit of having access to international innovation networks. So it's not just about fostering a domestic innovation environment, but connecting it with others around the world, because innovation ultimately is a global endeavor. And finally, a word on regulation and licensing regimes, which are important enablers, and they should not be impediments to innovation. So one of the ideas we're working on is on the notion of regulatory sandboxes. In other words, a controlled environment, whether it's within healthcare, within education, within maybe infrastructure development, where ideas can be test-bedded without concern that it's going to affect the broader system. So you can test-bed it, try it out, and then, based on the outcomes, scale it. The second area I wanted to talk about was on the need to stay connected and open to the global economy. And I think that takes on particular relevance in the environment that we're in today, and I think it is of specific relevance to Asia. India has already experienced the benefits from such openness and connectivity, whether at the macroeconomic level or in specific industries, automotives, pharmaceuticals, and ICT. It is a fact that companies that internationalize are more likely to do better and grow faster because it gives them access to larger markets, diverse resources, and there's a greater competitive pressure on them. This is not only true for companies seeking to transcend limits or, say, small domestic markets, it's also true of companies from large countries. So it's not coincidental that MNCs, now also called metanational companies, are major drivers of growth for their home economies in the US, UK, Netherlands, Germany, China, Japan, Korea, and of course India, where many of your larger corporations have developed strong international footprints. But I want to stress that possibly the biggest beneficiaries of internationalization are micro, small, and medium enterprises, particularly in the context of a digitalized economy. In the digital economy, the smallest enterprise can access the farthest markets, and MSMEs gain a cost-effective means of reaching out to a significantly expanded consumer pool as well as to B2B networks. So if the focus is on how the private sector can be a driver of growth, then this connectivity and digitalization will empower not just the large enterprises, but importantly, the MSMEs. And Asia's strong growth prospects offers our enterprises significant opportunities. I think we are familiar with the growth projections. IMF says the global growth will be at about 1.9% this year, yet emerging and developing Asia is projected to be fastest growing in the region at about 6.4%, with India and China and the ASEAN 5 leading the way. And I think India's Look East and Act East policies have been important in the development of India's strong economic ties with the region, and they've fostered a closer and more integrated Asia. We know that, for example, between Singapore and India, the trade and investment growth has been strong, but interestingly, Indian investments in ASEAN are also growing significantly. And they've risen from about $819 million in 2014 to $1.3 billion in 2015. Asian economies have worked on the foundations of a more integrated regional architecture, and this has been achieved through ASEAN-India Free Trade Agreement and other free trade agreements with ASEAN, as well as the Regional Comprehensive Economic Partnership. And I think the key point here really is we need to stay the course with these efforts to enhance collaboration between our economies, improve the ease of doing business, and build on the benefits of mutually open markets. Let me now just turn to the third and final point I wanted to make, which is on skills. An important precondition to benefit from growth, especially in the new environment, is skills, on a skilled workforce. But going forward, the type of skills we develop and how we develop them will have to evolve. With technologies developing fast, the obsolescence of workforce skills is a real risk. And unless we make the effort to constantly update the skill sets, that risk will become a reality. This also means that learning becomes a lifelong process, a lifelong journey, if you like. And national education infrastructure must support continuing education in the workforce. And we need a tighter nexus between education and industry so that the skills developed are responsive to new technologies and stay relevant to the needs of the economy. I know there are many of you from the private sector here who will agree with me on this, but this needs to become a part of a national ethos in the education system. So in Singapore, we have tried to evolve our system of education with that objective in mind. And in particular, we launched the National Skills Future Movement in 2014 and made further recommendations to enhance it through the Committee on the Future Economy. One objective is to support lifelong learning by our workers. To this end, we have developed skills frameworks for different industries to help workers and employers better appreciate the need for continual skills development. Our institutes of higher learning have developed courses in consultation with industry to support continuing education. And in the CFE, one of our recommendations was that we make these courses more modular and technology-enabled in order to ease access. In other words, finding a better way to strike the balance between work and learning on a progressive basis. There are many good examples of this around the world, in Europe, say in Germany and in Switzerland and so on. And I think we all need to find our own pathways in making this a reality for the workforce. A second objective we have in the skills domain is to ensure that skills developed are industry relevant even as technologies change. The survey of adult skills by the OECD showed a wide variation across countries, not just in the level of competency of their adults, but also in how well their employers use the skills their workers had acquired. So to make skills training more industry relevant, we have been involving employers in close collaborations with our vocational institutions and institutes of higher learning. So they play a material role in the development of courses, curriculum, and modular elements. And we are redesigning entire courses to integrate work and study, developing an online portal to combine information about skills needs and jobs available so that workers will have the information that they need to develop their careers and obtain the relevant training. So with these strategies, our hope is that our workforce can develop strong industry-relevant and multidimensional skills to allow them to take advantage of the jobs of the future. So if I can pull this all together, tech advancements and the corresponding shift towards an economy founded on knowledge, deep skills, globalization, and connectivity create growth opportunities. But the benefits of such growth may not be evenly distributed across society. And this is why it is incumbent on governments to respond, to provide support to those at risk because of these trends. And many of the policies require long-term government commitment and resources so that changes can be brought about. And in some cases, the short-term impact can even be somewhat difficult. The three policy areas I've talked about, innovation, internationalization, and skills, are not exhaustive, but I think they are important areas through which governments can fulfill this important mission. And the final point I want to make is this is an endeavor, if we get it right. First, it will allow for more inclusive growth because it will empower micro, small, and medium enterprises, especially if we are able to allow them to benefit from globalization and connectivity, complemented by access to financing resources. If they are so empowered, MSMEs can be significant and dynamic contributors to the economy. And the other element of inclusivity is really that ultimately this is about our people, making sure that whilst there are the risks of skills obsolescence and widening income inequality that come from globalization, our objective must really be to endow our people with the skills, the capabilities, and the wherewithal to adapt constantly to these changes so that they continue to be able to participate in and benefit